afternoon, ladies and gentlemen, and welcome. Welcome to my pop-up store. There's a rather elegant lightness to it. And in line with pop-up stores, which are transient, I'm going to attempt to offer you a binge insight into East Africa. So some crisp insights into developments on the eastern corridor of the continent. As you may be aware, having appraised the agenda, there is 3 installments to my responsibility. Over the next, say, 30 minutes and probably a little less, I'm going to cast a gaze on East Africa and give you some insights into that particular zone. Immediately afterwards, admittedly interspersed with a 10-minute gap, we'll then shift to a West Africa spotlight. And if you think you have further appetite for me after that, please return tomorrow at 8:30, because then we go to a Southern Africa insight. I'm anticipating few people will show up for that after what I deliver today, but I'm hopeful. Without further ado, I think during the course of today, you would have gleaned a good insight into some of the sweeping developments that have enveloped the continent over the last 2 decades. And just to crystallize a few thoughts, my chief executive, who's sitting right in front of me, alluded, for example, to demographic trends. He alluded also to the idea of urbanization, of deep-seated endowment of resources, the deepening in the financial services sector, and quite simply, technology as a tonic for growth. I guess this session is to help us penetrate those sweeping suggestions with a little bit more detail, and dare I say, maybe even get to know one another. I was intrigued at the beginning in my chief executive's slot, and as you will gather during the next 25 minutes, I'm also interviewing for my job, given that he's here. He was introduced as Sim, rather than Sim Chabalala, he was introduced as Chim Sim Chalababa. And of course, not being related to Ali Baba and the 40 Thieves, despite some being a banker. So we're getting to know each other, and I would like to have you get to know East Africa a little bit better. Now, the framework that I have chosen is to start off the remaining 25 minutes or so by very quickly delivering a few vital statistics, which I think will resonate quite easily, and then get into the heartbeat of my offer. And the heartbeat of my offer this afternoon is to share with you insights into income developments in a variety of African economies. Giving color to that a little bit more specifically. So with respect to the vital statistics, reminding you which corridor we're talking about. Of course, Africa is deeply heterogeneous. And I think if you look at this exhibit, there are several themes that leap out. The sheer size of some of the more dominant nations like Kenya and Tanzania, and perhaps also Uganda, within that common monetary enclave. But it also stands out is the comparative shallowness in terms of economic depth of some of those markets. Of course, this data, some of you that are a little bit more edgy will realize it's slightly stale. It refers to 2016 data. And we know well that Ethiopia has now surpassed Kenya as that region's largest economy. And sticking with the notion of vital statistics, this suggestion here is that growth has been frankly quite scintillating in a variety of areas. Ethiopia for a length of time has been at the spearhead of general favorable performance of East Africa. Certainly, and despite the cyclical slowdown over the last 2 years, particularly in the west corridor of the continent, East Africa, if anything, has been a beacon of resilience, typified by the suggestion of the next 2 years of economic growth. But now building to the rump of my presentation. Economists think about consumer spending through a ladder of consumption. Now, this particular exhibit has got near universal application. It suggests quite simply that as you journey along the x-axis with progressively rising per capita income, so too do your consumption patterns evolve. So if you look close to where the x and the y axes intersect, you will see, for example, low per capita income corresponding, for example, the consumption of maize. So when you have a low income, the bulk of your consumption would be going to the spending on essentials. And of course, at the very minimum, those societies that exist at the margins of society will be consuming maize as the main feedstock, as the main source of nutrition. As income rises, perhaps you'll supplement your maize, your rice consumption with protein, some contribution to protein in, say, your daily or even your weekly diet. And as you work through that ladder, it becomes very obvious that as your income rises, you shift perhaps by including discretionary items within your consumption basket. And of course, say when you get between $40,000 and $50,000 worth of annual personal income, the luxuries of travel, first local and then international, to glamorous destinations like Dubai, become a possibility. So as I hinted at the outset, this provides us with a fairly robust framework to think about priority sectors within the continent. It gives us a sense of contextualizing that so-called bottom of the pyramid and some markets that may offer, for example, scope for discretionary spending. And I would even go so far as to say there are some markets where the scope for discretionary spending or emphasizing the retail, the vendor of high-end consumer goods is simply not tractable. To perhaps bring it to an anecdote with a little less glamour, you could have a Porsche dealership in Lagos, but you'd be hard-pressed to find tractability for a Porsche dealership in Addis Ababa, despite the idea that there's near 100 million people in that particular market because of the depth of concentration of lower-income individuals. And with that hint, I want to now build up into giving you some sense of the income progression in a variety of African markets. Now, the study, just to give you an overarching sense of the universe that we focused on, was 11 markets. We looked at 11 markets, and we sought to understand over the last 15 to 20 years what has been the developments in terms of economic movement from, say, low income to middle income, and from middle income to high income. And obviously, for the benefit of this particular section, we'll gravitate to an emphasis on the East African nations. But before I get to the regional focus, let me just give you an overarching sense of the outcomes with regard to those 11 nations. Vacillating between 1990, 2014, and our expectations of what the income strata will look like in 2030. Several features leap out at you. In 1990, the suggestion from this particular exhibit is that 95% of households in those 11 markets were low income. It's an astonishing level of concentration of low income houses. And it reveals, perhaps to some degree, the startling observation. Africa is poor. Africa has got low per capita incomes. But in that is recognition of the price points, the type of products and services that one would want to deliver. To use retail, for example, biscuits that may be packaged in 2s and 3s. How do you think about selling consumer goods where households may not necessarily have storage capacity, especially chilling, refrigeration capacity in their households? Those begin to creep into what these particular images may signal to you. But the celebration in this particular exhibit is that at least over the last 25 years or so, up until 2014, you will note that there has been a swelling of the middle class. Lower middle class has increased, signaling that there has been upward mobility from low income to middle income, and in some markets, even a graduation to a sliver of high income. Our estimation in terms of the generality of the 11 markets that we looked at, which, as you will have noticed, covers some in East Africa, some in the West, and some in the southern parts of the continents, is that we see, despite the possibility that trend rate of growth may subside from roughly 5.5% over the last 2 decades to a trend rate of growth between 3.5% and 4%, we think that we'll continue to see the share of population in the various income ladders showing an upward migration. So this is the general sketch. Now shifting into a specific East Africa focus, and the countries that I intimated we looked at are coming on the screen now. So Ethiopia, Kenya, the Sudan, Tanzania, and Uganda. Now, if you look at Sudan's GDP, you will see it says 2.9. If you look at South Sudan, it says 119. That is a deliberate typo. I just wanted to see if you were paying attention. You will know well it's the other way around. So I find no fault with my typing, and to the audience that chuckled around here, clearly you being attentive, so well done. So that's my typo. But you just get a sense of the distribution of population and GDP within those respective markets. And again, I highlight the fact that it's deeply heterogeneous. So what do we have to say about Kenya's household income distribution? To some degree, it mimics the general tone I suggested for the overarching 11 markets. But let's just tear into this data a little bit more substantially. At a surface glimpse, it's clear that between 2000 and 2014, roughly a decade and a half, and possibly over the next decade and a half, we're suggesting that there is a swelling of the middle class, the broader middle class, lower and upper middle class. There is somewhat a shrinking of the low-income category. But what I've done in this particular exhibit, and I hope you are able to see it, and it's somewhat clear and legible, Africa's population will continue to grow. So even though your low-income share of Kenya's population will shrink relative to the continued swelling of the middle-income segment, because of population growth, you continue to see the nominal number of people that reside, for example, in the low-income segment continuing to expand. So in this exhibit, there's roughly a doubling in the number of households in the low-income segment that vacillated or functioned in that area in 2000, and our expectations of what it will look like in 2030, from roughly 6.5 million to 12 million. So nominally, the bottom of the pyramid will continue to enlarge if that is your seduction, if that is your poison over the medium term, while at the same time we continue to see an upward migration across the income ladder. So no doubt we think there is human development. We think that there is income progress. We think that the middle class is beginning to emerge. But this particular exhibit also signals that we need to understand that low-income segment better. So by 2030, by way of example, if we are suggesting that at least 2/3, maybe 70% of Kenya's population will still function in the low-income segment, we need to distill that low-income segment even deeper. We need to be able to stratify that low-income segment even more. Because within low income, say an individual or a household earning below $1,500 in a year, they would be judged as marginal consumers. But between, say, $1,500 a year and $2,500 a year, while still functioning within the low income segment broadly, will have a different spending bias than those truly marginal. I even can go so far as to say, if I categorized high low-income households as even having the capacity for a refrigerator, and therefore they become a market for the type of goods that would suit refrigeration, whereas a marginal consumer existing at the edges of society will not have that level of consumption dimension. So in the following exhibit, we are going to explode the low-income segment. And because I I was bereft of further vocabulary. I decided to break it up into 4 sections: low income, high low income, middle low income, and high low income. But I think you get the gist of that 4-stage stratification. And it really is sometimes the difference between life and death and a reasonable level of subsistence existence. And the general gist from this exhibit is again encouraging. So just to play back the earlier exhibit, if 70% of Kenyans are low income, it's too sweeping to just suggest that they are locked and there is no level of migration upwards. What you clearly get from this exhibit between 2000 and 2014 is that even within the low income segment, there has been human development. I see a lot of people taking pictures. Some will be collecting and invoicing you in a moment for that. That's called monetizing research. I'm going to be far more quicker in the remainder of my presentation because I think I've gone through the framework of the analysis. You get a sense of what we're trying to do by country to give some level of color with regard to generalized movement up the income ladder, and if there is a large level of low-income consumers, to also tear into that and to ascertain whether there has been progress within that 4-strip low-income segment. And so we go on to the next market that we looked at, and that's Uganda. In 2000, and if you consider that much of the last century, Africa's economic growth was around 1%. Africa's per capita incomes for many nations are feeble at $500 and $350. Uganda was a nation, too, that seemed to have missed a growth tonic during that decade. But in the last 15 years, we're beginning to see the semblance of political stability, some level of macroeconomic framework, infrastructure investment beginning to show traction. So again, you get the theme showing resonance where there is some level of increase in the share of the middle class. But again, echoing the earlier theme, the nominal number of people that function within the low income segment simply by virtue of very fertile population growth level continues to point to an expanding opportunity within the bottom of the pyramid. Within the low income segment, and you will see a recurring theme through much of the countries that we looked at in East Africa, the low income share continues to shrink and people are going up the income ladder within that broader low income segment. As I indicated, I'm going to be swift simply because I think you grasp the framework that I've been alluded to. I'm happy to make the exhibits available afterwards, available to you for a small fee, of course. If we look at Tanzania, again, echoing an incredibly poor start only in the late 1990s, but a fairly fervent level of growth, especially in the last decade, north of 4% in most years, is beginning to provide that spark for that income traction. And again, echoes of within the low income segment, you've got mobility. So there is mobility, even if it doesn't appear people are graduating to a high income segment and overnight seeing a life-changing episode. I'm being very swift, but at the same time, I think Ethiopia requires, I heard somebody whistle. In 2000, my exhibit, when I round up 99.6%, it says that everybody was poor. Of course, we know that in the latter part of the last century, drought, level of political dysfunction, and mostly bereft of economic program, you have a situation where it was largely, one of the most populous countries on the continent, in fact, second after Nigeria, but scintillating growth over the last decade. And I think Ethiopia provides that poster child where at first glance, you look at it and you think that it is bereft of consumer opportunity. But a forceful level of drive from the center, incredibly poor population in terms of the generalized per capita income, but again, some level of increase in middle income and high income status. But basically, 99% of Ethiopians are still within the low income segment. But about a decade of that scintillating growth that I referred to has seen progress at the bottom of the ladder. There continues to be some level of migration up the income ladder, and it therefore begins to creep into the narrative that Africa's development is going to be generational, multi-generational. 10%, 8%, even 6% growth. But we know as analysts that growth is an incremental concept. What matters to us as Standard Bank, and I would imagine anyone with a commercial interest in the continent, is that that incremental growth is constructive, it's positive. In real terms, 5-6% after adding inflation, it is double-digit growth rates, which I think is where the seductiveness of the offer comes in. Let's look at Sudan. Even Sudan, a very sizable population and GDP, and obviously this is North Sudan, $120 billion worth of GDP. The trend is very, very similar. So I'll also be incredibly quick up until we get to South Sudan. Again, people going up the income ladder. I'm almost varying only in the nominal number of households, but the generalized theme that should be bleeding out is, especially on the East African corridor, is that there's been an element of resilience through the last couple of years, 2 years in particular of African growth subsidence, but more meaningfully, a consistent level of advancement in human development, a consistent level of relatively buoyant GDP growth. When we get to South Sudan, there is a slight aberration. South Sudan is in fact the one nation where between 2000 and 2014, compared to the other examples, for their levels of political instability, the lack of direction, and until South Sudan was really born more recently, right? It's the newest member of Africa's 54 nations. But we went back to configure what South Sudan would have encompassed back in 2000. So even though, let's call it the last decade in the 2000s, more recently, and to the extent that while I submit there is still some level of volatility and concern over the near term, we see some embeds of progress in that respect, and also the promise between now and 2030 in terms of upward income migration. So I was given about 30 minutes to race you through the Eastern African corridor. The cardinal sin whenever anyone stands up and talks about the continent is that for the sake of time, for the sake of brevity, for the sake of crispness, I'm going to be somewhat general in occasion, but we hoped at least to give you some insight into income levels, which we think is a slightly more granular adjudication of the region's fundamentals. We have a few minutes left. If there's anybody who would like to ask a question before we go on to, a 10-minute pause and then the West Africa focus. Any questions? Remember, as I said, my boss, Sim Chabalala, is in the audience, so I'm interviewing from my job. If I get no questions, he'd probably see that as a slight. Are there any questions? Okay. I'm going to then pause. West Africa should start at around 3:40, whereas I performed solo and you had to tolerate me for the last 25 minutes. I will be accompanied by 2 ministers with regard to the West Africa slot. So please, perhaps grab a dessert, a beverage. At 3:40, we will start again. Thank you.